Nestle, that's the one in focus. Another quarter of double-digit growth for them, strong product launch pipeline. We've been tracking the Maggi brand, the royalty increase, whether it's on the cards or not, and how is it that they're managing higher expenses? Let's welcome on board Suresh Narayanan, the Chairman and Managing Director at Nestle India, joins in on the show. Suresh, morning. Let's start with the discussion on your Q4 numbers, because as was the expectation, you've delivered on the top line. Your strategy of volume-led growth seems to be now paying off on the domestic front. But while the pace has decelerated slightly, what would you say led to the growth, and will you be able to continue with this kind of growth trend going forward as well?
Well, fundamentally, three things are important for us to deliver. Number one is volume-led penetration. In many of our categories, still the levels of penetration are relatively low, so that is something that will focus. Number two is that we have considerably cranked up our pace of innovation and renovation, and the last quarter was supporting these innovations very strongly, and I think this will also be a clear engine for growth for us. The third element is that we have moved our organization from a pan-Indian framework to a cluster framework, dividing the country into 15 clusters. Sharply positioning, sharply resourcing and sharply monitoring our activities across the geographies will also give us incremental opportunities for growth. So I think these three things, if we are able to put it together well, as indeed we have orchestrated for the last couple of quarters, we should be able to have a healthy performance in this year as well.
Okay, good to hear that. Now, Suresh, most FMCG companies we interacted with spoke about benign raw material environment, but we've seen flattish gross margins delivered by Nestle. Why is that?
Look, I think fundamentally the margin structure has been impinged upon by the considerably higher level of advertising and promotion support that we have put behind the new launches in the last quarter. Almost 370 basis points of extra A&P has been put to support new launches like Nest Plus, enhanced performance in Nescafe Gold, our chocolates and confectionery portfolio, and finally also on the Maggi range that we have got. So I think these are the factors that have led to the drop in the operating profit margins that you have seen. The fact of the matter is that the benign era is probably gradually fading. We are seeing prices of commodities moving northwards, and I think our endeavor would be to try and mitigate as best as we can, using our scale, using our science and technology, using our manufacturing capabilities and sourcing capabilities to mitigate some of these cost increases. Only in the most unavoidable cases would there be consequent price increases, because remember our core strategy, it remains volume-led growth and penetration-led strategies.
Mr. Narayanan, good morning. Now, as evidenced in the rise in other expenses, you've invested a heavy amount in ad spends. Now, while this could be an effort to maintain your double-digit volume growth, this is definitely going to hurt your margins and bottom line, which is what we've seen. So, how are you looking to manage the same?
Well, all I can say is that we don't typically give guidance on what our EBITDA margins would be. If I'm able to maintain my average levels of profitability the way it has been for the last couple of quarters, I would consider it to be a terrific performance, seen together with strong growths on the top line that we hope that we are able to generate.
Tell us what the average current royalty expenses as a percentage of your sales currently, because I understand that SEBI allows a royalty payout of up to 2% before you have to take approval from your minority shareholders.
The royalty rates went through an elaborate study in 2012 after being static for about 2 decades. The study was done by McKinsey. It was validated and independently validated by Bansi Mehta and Company and also by KPMG, and it was put to vote at the board meeting on the 22nd of March 2013, where the executive directors recused themselves because they were interested parties, and the independent directors have agreed on the lower end of the recommendation of McKinsey and of the other two organizations, basically to increase it from 3.5% net of tax by 20 basis points each year for 5 years. So this has gone from 3.5 to 4.5% as on date, and there is no proposal at the moment to increase it any further.
Okay, thank you for that clarification. The contributions from new products have significantly gone up. What else do you have on your radar in terms of new launches, and what is the mix between premium and the non-premium products?
Look, I think one of the cornerstones has been that we have embraced a very strong innovation and renovation strategy. To give you a statistic, we are innovating at about 3 times the level of what it was pre-2015. So there's been a significant uplift and also a step up as far as the innovation and renovation cycle of the company itself is concerned. As I speak to you, there are at least 2 to 3 dozen projects, and these are projects involving a new product that are on the anvil, meaning they are being worked upon, and it is my hope that some of these would be launched during the course of the year. A reasonable proportion of these new products are actually premium new products that we do hope will be able to address the needs, requirements and the aspirations of consumers with a more discerning expectation as far as the quality of the experience is concerned. But needless to add, I think innovation and renovation, as you have rightly stated a short while ago, are key cornerstones of this company in the future.
Well, let's talk about Maggi. Faster than expected recovery seen there, but when do you think you will be able to gain market share back? Because after that 2013 debacle, you lost market share. You lost market share by about 5 to 7%.
Incidentally, the market share for Maggi noodles today is at about 60%. And also, the heartening piece on Maggi is that we have already crossed the value delivery on Maggi as compared to 2014 levels in 2018. So that mark we have already crossed. There is a small difference as far as the volume is concerned, which also we are confident of taking forward in 2019. At a market share level of 60%, obviously we are very clearly the market leaders. This is a hyper competitive space. There are some highly respected and capable competitors, and that is really what keeps the juices going as far as innovation, renovation and making that difference with an iconic brand like Maggi is going to do in the coming months and the coming years, and that's exactly what you will be seeing.
Right. You've also looked at extension of the Maggi brand into other snacking categories as well. How will premiumization and brand extension boost growth for Nestle? And how has the response been to these products so far? And what kind of growth are you penciling in here?
See, there are really three major vectors that will be taken up as far as Maggi is concerned. Number one is variety. And I think variety and a closer proximity to emerging consumer tastes, that's one part of it. Convenience, portability, because a lot of consumption today is happening on the go, and I think that is a huge opportunity for a company like Nestle with a brand like Maggi. And the third piece will really be resting around the area of value packs, which is really those that will be laddered in a manner to ensure that consumers are gradually moving up the value chain. In all of these, I think the level of differentiation, the level of communication, the level of access that we will be putting in is of a fairly high order. And I think differentiation being the name of the game, these three vectors in terms of variety, in terms of portability, and in terms of value will form the key dimensions of brand Maggi. It will not only be in noodles and in areas allied with noodles. We also have a reasonably strong business in fortified flavor mixes, Masala and Magic, which is also been growing extremely well. We also have a sauces business which has also been doing well. So there will be many more manifestations of Maggi that you will be seeing.
Right, now you've seen very good market share gains in your categories like chocolates and beverages. The ready-to-drink Nescafe as well has made great strides. What kind of growth do you see there? Because these are very premium products.
I think chocolates and confectionery is clearly an exciting space. With brands like Kit Kat and Munch and Milky Bar, I think we have made very, very strong inroads. And with Kit Kat, we have a brand that is really extremely promising in all the avatars that it has taken in the marketplace. We also recently launched L'Atelier, which is our brand of chocolates from Switzerland. These have been imported and we have launched them in the market. These are really super premium chocolates where no two pieces taste exactly the same. They are almost artisanal in terms of the way in which they have been crafted. I would recommend that to you as a chocolate connoisseur. And I think the market very clearly is growing both in the mid-market segment and also in the premium segment. We were not particularly active in the premium segment, and I think that is where our activity levels have increased substantially in the course of 2018, and you'll see that in 2019. Beverages, spot on. I think Nescafe is a huge opportunity for us. Not just Nescafe, but we have also relaunched Nescafe Gold that has got off to a good start. It is the best coffee, I dare say, with some immodesty that is there on the market. It's a wonderful coffee, and I'm sure that this too will catch on very well. Ready to drink, I think our Nescafe brand of ready to drink, especially the ones in RTD and in cans, have again got off to a terrific start. We are seeing some very, very rapid progress happening in these brands. And you are right, I really place a lot of innovation, renovation and growth ambitions on these three categories in the growth story for Nestle in the future.